If you have $1,000 and you want to get started in the stock market, this video will show you 6 investing ideas that you can start using tomorrow. Welcome, I'm David Das and I want to thank you for watching this video today. Before we move on with the presentation, I would like you to please take a moment to read the disclaimer. I'm not a financial advisor and this presentation is for educational purposes only. Please do your own research before investing your own money. Thank you. In this video, we will cover 6 investing strategies. These are couch potato investing, low-cost index funds, fractional shares, robo-advisors, low-cost Dow 30 ETFs and stocks, low-cost TSX 60 ETFs and stocks. To save you time, I have the presentation copy available for free. Please see the description for details. If you are new to my channel, I want to extend my warm welcome to you. If you want to be notified in the future when I upload new videos, I will really appreciate if you can kindly subscribe to my channel. Thank you. The first strategy we're going to talk about today is called couch potato investing. It was created by Scott Burns in 1991. It is a low-cost, diversified portfolio to get the return of the overall stock and bond markets. In the beginning, when it all got started in the US, the idea was to invest equally between bonds and stocks. Over time, though, people have adjusted the above ratios based on their risk tolerance levels. As mentioned earlier, the couch potato portfolios have been modified over the years and they can be broadly categorized into 4 main groups. These are aggressive, balanced, conservative, and conservative with income, with different proportions of stocks and bonds. Few companies came up with an excellent idea of creating model portfolios. One of them is by Vanguard. As you can see, they have 7 different risk categories. I have highlighted 4 of them, and basically you buy one ETF that will cover that entire risk profile. The second set of model portfolio are the iShares portfolio. They also have a similar 7 categories of risk, and I have highlighted 4 of them with the red boxes indicating the ETF that covers that risk profile. The third model portfolio I'm going to talk about today is the TD E-Series funds. They have 5 different risk profiles, but in this model portfolios, there is not one particular ETF that covers the entire risk profile. So you have to buy 4 different types of funds as indicated to have that proper ratio that will be suitable for your risk level. The next category of investing strategy that we're going to talk about today are the low-cost index funds. These are passively managed funds and they seek to track the performance of the overall market indexes such as the S&P 500 index in US, the TSX 60 index in Canada, etc. There are many types of index funds. They can be tracking the overall market index. It can be bond index. It can be commodities index such as oil, gold, silver, natural gas. It can be a country index, or it can be a sector index, and many more. So we can choose ETFs or index mutual funds. ETFs are generally available at a lower cost, but it needs a more disciplined approach. Whereas the index mutual funds are generally a bit expensive, but they can be set on an autopilot. This list shows you some of the low-cost ETFs to track the broader US and Canadian stock markets. I hope that will be useful for you to do further research. The next investing strategy we are going to talk today are the fractional shares. If you have a small account and you're dreaming of buying shares of big companies, this method will help you achieve that goal. Many brokers in the US offer the flexibility of fractional shares, while in Canada, to my knowledge, only Interactive Brokers offer this service. This table gives you an example of an investor who has $1,000 and wants to buy 5 big name stocks with $200 each. If you're enjoying the presentation so far and you'd like to support my channel, I'll really appreciate if you can like this video. And I really want to thank you for that. And let's move on to the next strategy. The next investing strategy we are going to discuss today are the robo-advisors. They are the low-fee digital wealth managers, and investing with them is like investing on an autopilot. This investing strategy is good for people who have no time, have no inclination to learn about investing, and they want to have some financial advice at a lower cost. This table gives you an idea of some of the robo-advisors in the US, but I will highly recommend please do your own research before selecting any one of them. Robo-advisors concept is fairly new in Canada. Here are some of the names that you can do research on before investing your real money. The next investing strategy we are going to cover today are the low-cost Dow 30 index ETFs and stocks. Dow Jones Industrial Average is made up of 30 blue-chip US companies. But some companies may be better and more suitable to you than the others. This section will talk about on how to participate in the Dow 30 index. We can do that through an ETF called DIA or other ETFs like IYY or through low-cost Dow 30 stocks. On June 28, 2021, I did a screening of Dow 30 stocks which are below $100, and I got 7 names which are shown here. The next investing strategy we will cover today are the low-cost TSX 60 index ETFs and stocks. TSX 60 index is a stock market index of 60 large companies listed on the Toronto Stock Exchange. Some of these companies may be better and more suitable to you than the others. In order to participate in the TSX 60, either you can buy index ETFs such as XIU.TO or HXT.TO, or you can buy low-cost, large-cap, dividend-paying TSX 60 stocks. On June 28, 2021, I did a quick search of large-cap, dividend-paying TSX 60 stocks which are below $100. Here are the screening results. Do your own research before you invest any money in any one of these stocks. Thank you. I hope you found this video useful. I will be very grateful to you if you like the video, as it will really support my channel. Thank you for watching. Bye bye.